auditor.
All right, good morning, everyone. It is the appointed hour, and we'll call the December 8th, 2016 monthly meeting of the Employee Retirement System to order. Item number 2 on the agenda is to approve the minutes of the meeting of November 10th. Have a motion and a second. All in favor? All opposed? Motion carries. Item 3 is the consent docket. We have a motion and a second. All in favor? All opposed? Motion carries. Item 4 is to ratify approvals. We have the payroll and the postage payment for the month of October. Second. Have a motion and a second. All in favor? All opposed? Motion carries. Item number 5 is to approve the claims docket. We have a motion and a second. All in favor? Aye. All opposed? Motion carries. Item number 6 is to approve the following applications for service retirement. We have 5 applications this month. Second. We have a motion and a second on item 6. All in favor? Aye. All opposed? Motion carries. Item number 7 is to receive the report of death, authorize the payment of the $5,000 death benefit, and authorize the Secretary to make the necessary changes to conform on the following. We have 3 cases. Motion and a second. All in favor? All opposed? Motion carries. Item number 8 is to receive the report of death, authorize the Secretary to make the necessary changes to conform on the following. We have 1 case. Motion to second on item 8. All in favor? Aye. All opposed? Motion carries. Item number 9 is to approve the following application for vested rights. We have 1 case. I have motion to second on item 9. All in favor? Aye. All opposed? Motion carries. Item 10 is to approve the request of the following to terminate vested rights and commence drawing retirement benefits. 1 case. I have a motion to second on item 10. All in favor? All opposed? Motion carries. Item 11 is individual consideration items. Item A is the affidavit and agreement in regard to retirement benefits owed to Darrell Fife. Does anyone have any questions on this? If not, I'll entertain a motion. I have a motion and a second on item 11A. All in favor? All opposed? Item A passes. Item 11B is our agreement with Asset Consulting Group. Does anyone have any questions on that? Second. I have a motion and a second on item 11B. All in favor? Aye. All opposed? Motion carries. Item number 12 is to elect the chairman for the term of January 1st, 2017 through December 31st, 2017. I will entertain nominations from the board. Second. Have a motion and second. All in favor of me continuing as chairman for the next year? Aye. All opposed? Motion carries. Item number 13 is to elect a vice chairman for the term of January 1st, 2017 through December 31st, 2017. We have a motion and a second to continue Ken as the vice chairman for the next year. All in favor? Aye. All opposed? Ken, you're not okay. Motion carries. Item number 14 is the investment consultant report. Jason, you're up.
Okay, good morning. First off, just want to express ACG's appreciation for the long-standing relationship and your continued confidence in our firm. We really value this relationship, and hopefully you're getting the value for the service as well.
Well, I know I speak for the board. The feeling's very mutual.
Thank you. Thank you. So you have your November report in front of you. I'll try to keep my comments brief. Certainly the what's happened in the markets, we've seen a pretty big run in the U.S. equity markets, and it's been fairly, while the major averages are up significantly, it's been fairly narrow in scope. Industrials, financials, materials, things that had been down the most, and now we're seeing we've seen such a turnaround in the sectors that are leading and styles that are leading. It's pretty dramatic. And small cap is up about 20%, about 10% above large cap now, year to date. Large cap stocks, the S&P is up about 11%, and the Russell 2000 is up over 20%. But between value and growth, we've seen major change in leadership, because really coming out of the financial crisis of 2008, value has really lagged growth over that entire 8-year period. And that's predominantly a result of financials making up such a big part of the value indices. And what we've seen really since the election day is financials have rallied the most, up over 20%. Through yesterday, small cap value, the Russell 2000 value, is up over 30%, and the Russell 2000 growth is up about 11% year to date. So that's a 20% differential between value and growth in small cap. And so it's pretty isolated as well in those sectors, financials and industrials, with expectations lesser regulatory restrictions potentially, but a lot of that it remains to be seen, and policy takes time to be implemented, as well as the expectation of rising rates. That benefits banks as well. Infrastructure spending benefits the industrials. What we've seen hurt are the stocks that had done the best, and those were the stocks that looked more like bonds earlier in the year that were offering a yield. Consumer staples, telecom, utilities, those have sold off to some degree. And as you look at overall your portfolio, you say, wow, major averages, the S&P and the Russell 2000 are way up. At the same time, bonds are down. As interest rates have gone up, the 10-year Treasury yield, and we talk a lot about that because that impacts intermediate term bond portfolios, such as how yours is constructed pretty significantly. 10-year Treasury yield went from 1.6% at the end of September to about 2.4% as we stand here today. So that's it's almost an 80 basis point increase, but if you put it in terms of percentages, it's a 50% increase in the 10-year Treasury yield. And as yields go up, bond prices go down. So since the end of the quarter, the end of the 9/30 quarter, the Barclays Ag is down about 3%. So that's pretty significant. And when you think about your fixed income making up 25% of your assets, now it doesn't, fortunately, we've had your bonds are positioned to have less interest rate sensitivity, or be less impacted by movements in U.S. interest rates. And so overall, on a year-to-date basis, your bonds have done fairly well. So just looking at the second page of this report, the year-to-date numbers, and I was talking to Renee before the meeting, certainly if your fiscal year was June, that looked very different. Returns were essentially flat in June. If your fiscal year was September, you looked really good. As we're going into 12/31, I think it'll turn out to be a pretty good one-year period, but right now you're up about 5.7% gross of fees, 5.1% net of fees. Policy index is up 7. What's hurting there is your U.S. equities, while doing very well. That's, if you combine large cap and small cap, that's 35% of your portfolio. It's been tough to keep up as the market has really rallied over the last month. Your large cap, predominantly passive or risk controlled with the Intech strategy, having a little bit more of a value bent right now would have helped over the recent period, but still up 8.7 where the benchmark's up 9. Small cap up about 13%, so very good returns. Overall, the Russell 2500 is up 15.3%. Within small cap, Times Square, the growth, you can see the difference between your growth and value managers are pretty substantial. Obviously, Ernest on the value side has outperformed Times Square. That said, Earnest is more of a relative value. They're not a real deep value manager, so they're not necessarily benefiting as much from being significantly overweight to financials or industrials. The long short or the hedged equity piece, as markets have rallied, has been a headwind. And then on the international side, international and emerging markets haven't done as well. Emerging markets sold off pretty dramatically after the election. Much of this has been in the last month. Emerging markets had led global markets ahead of U.S. equities year to date up until the election. But the strengthening of the dollar since the election and really since the end of the quarter has had a pretty significant impact on emerging markets. And you'll see a pretty big dispersion in your EM portfolio relative to the EM benchmark. Much of that, while it's a small piece, 1.5% or so of your overall portfolio, and about 30% of your emerging market portfolio, the Wasatch emerging market small cap, had been a big difference between emerging small cap and the broader index. And you see this on page 3. The return of just the index, the EM small cap index year to date is positive 268, whereas the broad EM index is positive 1128. So just the difference between small cap and the broader EM is about 9%. Add to that, Wasatch underperformed a little bit, and that was some exposure to India that had an impact there. Fortunately, it's a small piece of the portfolio, so it hasn't had a dramatic impact. Fixed income and real assets have been additive, although returns not as strong on the fixed income side. But your fixed income overall year to date up 3.7%. That's really been led by the global bonds of Brandywine and the Core Plus in WAMCO. While it was a tough month, they had delivered pretty outsized returns year to date prior to November that provided that excess return. And then real assets, which is predominantly your Morgan Stanley Prime Property Fund, continues to outperform. So all in all, while markets are positive, domestic equity markets are positive, it doesn't look that way across the globe. It's been pretty choppy and challenging. We really continue to we think the positioning of the portfolio, particularly on the fixed income side, with less sensitivity to rates in a flat to rising rate environment, your bond portfolio should outperform going forward. And then maintaining diversification, active management, which has struggled the last several years, as monetary policy becomes less impactful, as we think rates are probably going to go up, it's going to be impactful the other way. So as we've had very accommodative monetary policy the last 8 years, it's kind of been a rising tide has lifted all ships, and it's been difficult for active managers to, from a stock selection standpoint, to add value. Going forward, we're not really sure which direction fiscal policy will lead us. That will be more impactful. We expect there to be more winners and losers, and active management to play a bigger role. And so long-short equity and some of the other active components you have on the small cap and international side, we anticipate will, from a relative value standpoint, should be additive. Any questions on the monthly report?
This is probably a silly question, but on the bonds, with our bond managers, so as they move into what's expected to be a rising rate environment, does it change their strategies? I mean, does it influence their strategies, or more it's a matter of they work within the environment still using the same strategy?
Well, none of your bond managers your active bond managers, Brandywine and Western, are really focused on duration, so as a tool to generate return. So Western is going to be focused more on credit and higher yielding securities. They'll have some they always do. So bank loans, high yield, bank loans, which as yields rise, they adjust, those yields adjust to the portfolio. They're going to have significantly less exposure to treasuries, U.S. treasuries and agencies, which have much more interest rate sensitivity. The same with Brandywine. A little bit same but slightly different, because they're focused more on relative value and a income advantage globally. So they're looking across the globe at different sovereign bonds that offer a higher yield than U.S. bonds. They tend to have, the portfolio overall tends to have a little bit longer duration or interest rate sensitivity than some of your U.S. portfolios, just because the nature of the issuance is a little bit longer there. So if foreign bond yields go up dramatically, it will have an impact on the Brandywine strategy. However, the yield advantage that they're getting is pretty significant, expecting that to offset some of the impact to price. Thank you all. Have a great holiday. Merry Christmas.
You too, Jason. Item number 15 is comments from board, staff, and citizens. I'd just like to wish everybody a very Merry Christmas. You know, I know this is kind of a crazy time of year, and, you know, folks, you know, especially our members, you know, it could be, you know, kind of stressful around the holidays, but I think, to a person, I think we can agree the one thing that they're not going to stress out about is their retirement. And I just want you to know that I'll appreciate your service, and we just need to keep doing what we're doing. So, thank you. If anybody else has anything?
I'd like to thank you, Paul, and you, Ken, for your continued leadership on the board. Appreciate you guys doing that. And I'd like to reiterate what Paul said about our relationship with ACG. We really value that. And I would also like to say that I am not Santa. And so I don't know where the candy came from. It was not me. But thank you, guys.
I just wanted to reiterate what Paul and Jim have said, and also want to thank all of you guys for the opportunity to serve with you. I think we have a really good board in place. And thank you, Jim Williamson, for the candy. It does not go it does not go well with the city's health initiative, but we will put that aside for the time being. Thank you, guys, and Merry Christmas to everybody.